Good morning, ladies and gentlemen. Now, most of the time, you're going to realize that the support and resistance trading strategies, or the support and resistance trading strategy, is one of the most underrated strategies ever. But in this video, we're going to discuss how best you can be able to understand, how best you can be able to trade the support and resistance strategy with a lot of precise. So in this video, we're going to learn about how to draw support and resistance zones correctly. That is going to be the first thing. The next thing you're going to learn is key price action tips to confirm levels that help you to be able to know that this is a legit support and this is a non-legit resistance or support zone. Then you're also going to learn how to trade breakouts and bounces, right? Because most of the time the market will always try the best that it can to play around a certain price zone, and then after that it's going to bounce or break out to one direction, come back to that particular zone again, and then continue in that direction. Then we're also going to look at real chart examples on how you can be able to take a look at all this. Now, when it comes to trading Forex, stocks, gold, crypto, whatever you're trading, this strategy is one of the easiest, the simplest, and of course, one of the strategies that you can be able to use to trade, whether you are a beginner, you are a pro trader, or you are an intermediate trader. It doesn't matter. So long as you understand these key levels that I'm going to show you in this video, is going to be extremely useful for you. So it's going to help you to be able to have precision when it comes to decision making in your market. So let's share my screen here, got the chart so that you guys can be able to understand what we are talking about here, right? Okay, there we go. So we're looking at support and resistance, and basically when we talk about support and resistance, for me, I always like looking at my support and resistance from a higher time frame. Don't worry about this one. This one was actually a trade I sent to my Telegram channel a few minutes ago. It was around 7:45 when I sent it to the Telegram channel, and actually my first take profit was around this area. That is that was TP1, and then TP2 is going to be here, and then TP3 is going to be on the low. So this is basically a trade that I sent out to the Telegram channel right now as we speak, and it is actually still running. Already take profit 1 has been hit, and we're looking to move all the way to take profit 3. So if you're here and you've not joined my Telegram channel, go ahead and look for Mirage FX, and you can also leave a comment so that I can send you the link to that Telegram channel. We normally send this kind of setups every morning, and yeah, we vibe together, we trade together. Everything that we do together as a team, and it's just a matter of, it's just an issue, trying to ensure that everybody gets to max out on this market. All right, so getting to this today's class, we're talking about support and resistance. So what is support and resistance? Support basically means a level in the market in which the price keeps on bouncing back from. It's a level in the market where price keeps on bouncing back from, or a level in the market in which price tends to reach that particular zone and then it can't go any further, right? That is now resistance. And then support, it's like the flow. So when you think about support, think about the flow on which you're stepping on. That is now the easiest way to define it, where you're stepping on. And then when you think of resistance, think of the ceiling. When you jump up, you tend to reach a certain zone and you can't go beyond that. You go right back down. That is now your resistance. So even the price, even the financial market also has what we call the support and resistance. And depending on the type of a trader that you are, you can look at the support and resistance from different time frames. All right. So I'm going to give you my personal preference. I normally look at the daily time frame. Daily time frame for me, because I'm a day trader, gives me what I love to see, what I would love to see mostly on the daily time frame. And we are on the gold, but I always love giving examples from Euro USD. I always love giving examples using Euro USD. But this type of knowledge, you can use it on any asset. You can use it on any asset, right? So this is Euro USD on the daily time frame. So the very first thing that I normally like to do is go to the daily time frame and just have mark the high and the low of the previous day high and the previous day low. Just that, simple as that. The previous day high and the previous day low. So this for me is going to mark out my support and resistance the immediate support and resistance on the daily time frame. That is my personal preference. Like for example, you can see this was Friday. This was Friday, and this is now today. This is Monday. And when you look at Friday carefully, you're going to realize that the market went to the previous high of Friday, and now it is looking to, like, start going back down. All right, it's like selling right now as we speak. So that was the high and the low, and then the open and the close of the previous day, that is on Friday, right? So when I mark that, it becomes easier for me to know where my price is right now. Are we on the previous day high, or are we on the previous day low? Are we at the 50% of the previous day? When I do that, it becomes easier for me to know where the price is currently. And when I get to know where the price is currently, I can easily know what to expect in the market, right? So as you already understand, especially for those who are trade supply and demand, most of the time the market tends to take out the previous day high or the previous day low as an area of interest in terms of liquidity. We're going to discuss about that in the next videos. Takes out the liquidity and then tries to go the opposite direction. That is basically what happens. But when you look at this right now, you're going to realize that the high has not yet been taken out yet. It has actually created what we call a double top, right? A double top because it has given us two tops. Like we have a top and then another top. Yeah. So we have not taken out that high yet. You can see here, this is on the 4-hour time frame, and the market is kind of playing around this zone. If you look at this setup, this candlestick pattern here, you're going to realize that this is actually a bearish harami. And if we close below this line, then there's a high possibility that the market would want to like cover up the whole of this fair value gap that is basically lying around that zone. So that is the reason as to why I place this one as a take profit. I also place this one as a take profit, so that when the market keeps on dipping, trying to seek for this fair value gap, then my people are going to be making money. Back to the video. We are talking about supply, support and resistance. So this was on Friday where the market went all the way up, created a support around this area, created a resistance, around that area. So this is now our support. So that is basically your support and your resistance, and the market is currently playing around here. So when it comes to marking the support and resistance, you want to be sure of what the price is currently doing. You want to mark your support and resistance on the higher time frame, so that you can be able to know that when the market comes back to this area again, then there's a high possibility the market is going to like either bounce back from that area, or the market is going to like play around that zone. So when it comes to support or resistance, support and resistance are zones and not price points. They are zones and not price points. You don't want to mark your support and resistance using a straight line like that. You don't want to do that. Why? Because if you do that and the market comes back to that particular zone, like for example, let me just take an example of this one here. Let's say you put that one as your support. Then that simply means you're going to disregard this as your resistance. Sorry, you're going to disregard this and say this is not my resistance because it did not come to where the market was. So what you need to do is you need to mark out your support and resistance using a price range. Like for example, you can use that. You say now this is my resistance zone. Like the whole of that area is my resistance zone. Anything that comes around that area is my resistance zone. You can also say that this is now my resistance. This is my resistance, right? The whole of that is my resistance. And this was resistance on this side. This was resistance, and it became support here because the market broke above. It became support again. The market tried to break below, but it failed. It wicked down here. This again became resistance, and you can see now the market also broke below there, and now this has become resistance. So that basically means what? When the market hits around your resistance zone, there's a high possibility it's going to do a retracement, then do something like that if it is to continue going up. So that is something that you really need to understand so that it can be easier. So support is an area, not a price point. It is an area. You look at support as an area, not a price point, right? So you can also take a look at support in terms of trend lines. You can take a look at support in terms of trend line. Like for example, you can say that is my trend line. So this is my support. 1, 2, 3, 4. These are areas in the market where the market bounced back from repeatedly. And the best way to use this to draw your support or resistance on a trend is by use of the parallel channel. That is the best way. So you just pick it up, you draw it like that, and then you expand it. You expand it like that so that it can cover up, the high and the low of that particular uptrend. And you can see the market was basically bouncing back within that particular range, that particular price parallel channel. It was bouncing back from it. So up here, you can see this is resistance, resistance, resistance. And then down here, it's your support, support, your support, your support, right? You can actually do that on multiple assets or multiple areas. You can see again, this is your support. The market was creating that as your support. Then it hit all the way up there, and then that was your resistance. You can see the market was bouncing back from that multiple times. It started here, came back, went back here, came back, then broke above, created a new resistance that is above there. And when you look at it carefully, you're going to realize that the price is currently here. That is where the price is currently, around this resistance, right? Around this resistance. That is where the price is currently. Again, when the market priced, or when the price bounced back, broke above, it became a support. And you can see that is basically where we are right now. So when it comes to support and resistance, always make sure that you mark them out pretty well. Once you do that, then it becomes easier, because once the market comes to that particular zone, you'll be able to know that this is an area that it was visited already previously. And because it is an area that was previously visited, there's a high possibility the market is going to revisit that particular area, either to bounce back or break through. And once it is broken through, then you know that if it was a resistance, it's going to become a support. If it was a support, it's going to become a resistance. So that is basically how you are supposed to be looking at it. Now, what happens if the market breaks your resistance? Then if the market breaks your resistance and it does a retracement, you can use your previous resistance as your price target, as your target when you take your sell, as your target when you take that that entry, so that you can be able to now target it, because you are assuming that it's going to be a new support. So if it is going to be a new support, it can be a very nice place for you to target. Like, for example, what am I trying to say? This was the previous resistance, right? And the market broke above here. So when the market broke above and started coming down, if you took a sell somewhere up here after the change of character was created, you can see after the change of character was created, for example, there, and then there was a retracement back there. So if you took that sell around this zone, then you could have targeted this area as your take profit. That is basically what I was trying to say, that you can target that area as your take profit, simply because it was a previous resistance and there's a high possibility that this place is going to be revisited by the price again. So you can use that as your target, so that you can easily hit your take profit like that. You can see again here, when the market broke below, did a retracement back to this drop base, this base here, and then once it came back to this particular base, what happened is that it went down. So you could have targeted this support here as your area of interest, and you can see this was a previous support. You could have easily targeted it like that, right? So that is it for me. Let me just make sure that guys, if you have not subscribed to this channel, make sure you subscribe, so that we can be able to get as many of these videos as possible. And again, share with the people who want to learn. Subscribe, share, like, and comment, and see you on the next video. Bye bye, guys.